Welcome back to Real Estate Mindset. Today's video is going to be bonkers, you guys. It is your Thursday housing market update. So what we will do today is review the Fed economic data, updated graph on the average 30-year fixed rate mortgages to see where we're at. Then we're going to dig into my local housing market, hop on MLS, and we're going to see if we can find any signs of a housing market cool down, at least in my area of Houston. And then we're going to end this video talking about a potential recession. And as you guys may already know, what came out this morning is negative GDP growth the first quarter of 2022. So we may already be in a recession. But if you guys can remember, I am not a financial advisor. I'm an opinion sharer, but I am a realtor in Houston and a loan officer in Texas. Been doing this stuff a couple decades. And if you guys could, please like this video, subscribe to my channel if you haven't. And as always, comment below. You guys help educate me, and share some articles if you want me to do a video. Now, we're going to jump in first to the Fed economic data graph showing 30-year fixed rate mortgages. And as you guys know, I do these updates on Thursday to wait for that specific graph to update, because I've been telling you guys that the biggest threat to the housing market crashing is unaffordability. And where does that start? Typically, residential mortgage interest rates. So let's take a look at how we are at the end of this week. Okay, guys, so here's the graph right now. And our new average 30-year fixed rate mortgage actually went down to 5.10. Okay, so we're at 5.10 now, which essentially means, you guys, that the interest rates basically didn't change at all. So they essentially stayed the same. And here's the thing, that's just in time for next month. So we're entering into next month in 2 days or 3 days. This is just in time for next month's Federal Reserve meeting to hike interest rates. Now, as you guys know, Jerome Powell came out and said in May and in June that more than likely they are going to continue to raise the federal funds rate 50 basis points each meeting. So potentially we're going to have additional surges in our interest rate, additional unaffordability coming to our housing market, and purchasing power once again being devastated. So we're going to see that in the next couple of weeks here. But as is, things are still super unaffordable because the drastic surge in interest rates topped with really historically high median home prices, right? So listing prices and home prices are through the roof. That topped with surging interest rates, unaffordability is all over the place, right? So we're going to take a look at that graph again next Thursday. The reason why I'm not bringing Fed economic data as far as housing inventory is it updates once a month. So next week, I'll probably have the national average inventory for you guys. And I'm hoping that we're going to see that go up 100,000, right? I'm just going to throw that number out there right now. I want to see inventory up 100,000. I don't think hopefully it's not asking a lot, but we should see it up because we're entering into those months now that are a little bit hotter, actually a lot hotter for listings coming to our market. So that's going to be important. Stay tuned for next week on that update, and hopefully that graph will be updated so I can share that with you. Now, what we're going to do, you guys, is we're going to hop into my MLS, multiple listing service, and we're going to look at my local market in Houston. And I essentially just want to see how long homes have been sitting on the market. I want to look at some new builds and kind of just see if we can see signs of my area slowing. And as I've told you guys, Houston and Texas in general is going to lag behind the rest of the housing market because we're in such a high demand area and number one as far as migration and people moving here. So that's why it's really important for us to look at the entire nation, because if I just looked at Houston and my local housing market, I might have fear of missing out myself because it is super bad. But let's hop in right now and look at the live data from MLS around Houston. So guys, here's Houston right here. And I'm going to zoom in because I'm definitely following my local market. I look at a lot of different cities, but I definitely follow my local market every single day. So what I'm going to do is I'm going to zoom into Atascocita, Humboldt, Porter, Kingwood area and kind of just look at Kingwood. And I think that's good for my viewers as well if we just kind of stick with one area. Now, if you guys remember, everything in orange is essentially inventory, but it's under contract. So these are all the pending, and you guys can tell there's a lot more things in orange than green, and green represents active listings. So there's a ton of things under contract and very few active listings. You see that? Very few green, a lot of orange, okay? But what I want to do, guys, is I'm going to scroll down here into this general area right here. And we're going to take a look at this inventory and see how long it's been on the market, just to give us an indication on, are we still, are things still selling in 2 days, multiple offers, things like that. So let's take a look at this first listing right here. All right, let me see how long this has been on the market. This has been on the market 28 days. So that's a good sign, you guys. Normally they can sell a lot faster. So that's been on the market 28 days. Let's see if we could get some more info. Let's take a look at this one here. See how long this has been on the market. Okay, so that's also good, you guys. So this days on the market, 33. So this has been 33 days on the market, okay? That's really good news, actually. And then let's look at this one down here and see how long this has been on the market. Okay, so this has been on the market 10 days, but at least we have inventory, you guys, that is staying on the market and sitting, and hopefully that will lead to price reductions. Now I want to show you guys, let's see. Now this listing, let me show you guys this listing. This just came on the market. Now, this is crazy, you guys, because this is kind of an older resale house. And in my area, $158 a square foot for resale is drastically overpriced. So I'm still seeing listings that are way overpriced that are probably going to sit on the market a long time. I doubt that this house is going to sell anytime soon because, again, price per square foot on a resale that's not really upgraded, almost $160. What I want to see, you guys, for price per square foot as far as resales is about $120. Okay, so about $120. That was almost $160. So you can see that's way overpriced, right? Let's just, for the sake of it, let's see how much this one is selling for price per square foot. All right, this one's 130. So do you see what I mean? I want to see 120. This is slightly over what I want to see, but at least it's low. And you guys see this here? This has actually not only been sitting on the market 28 days, this also has a price reduction. So we got a price reduction here from 324 to 310. That's a $14,000 price reduction. So that's really good news, you guys. I didn't notice that actually until right now. So I have a price reduction sitting on the market and 130 a square foot, which is a little bit more in line. But what I want to show you guys now is I want to show you how overpriced these new builds are. So we're going to go in this pocket right here. These are new builds right here, you guys. And these are way, so this inventory is still available because these new home builds, as most new home builds are, probably 20 to 30% over resale value. So new home builds are really, really overpriced, you guys. But let's look on this first one right here. And I just want to give you guys an indication. So there's not even pictures here, right? This is not even done being built. And if you see here, $168 a square foot. Now, remember what I'm telling you. It's more realistic to have $120 a square foot. If it's really nice, maybe $130. So you can see how overpriced per square foot, price per square foot, new home builds really are at $168.28. Now, I understand, you guys, in certain parts across the nation, $168, especially in Southern California, right? $168 may seem really low price per square foot, but that's why Texas has such high migration. We're an affordable state, but what I'm saying is $168 is drastically overinflated for a new home build in my local market. I hope you guys, kind of saw some things. At least, I'm seeing things on the market longer. I'm starting to see some price cuts. I'm starting to see things come back on the market. New home builds are still through the roof. So I'm hoping as we go into 2022, we're going to start seeing that much less than $168 a square foot. Now, what I want to talk about now, you guys, is a potential recession and the fact that we may already be in a recession right now. Now, as you guys that have been following me know, I have been projecting that we are going to possibly go into a recession Q3 of this year. But I want to make a quick point, you guys. Nobody has a crystal ball, right? I'm anticipating these things and sharing my opinions based on my own experiences and based on data. But at the end of the day, you guys, I don't know what's going to happen. So that's why I'm always like, please comment, please share your information. If you disagree with me, let me know why, share some data, because I don't know what's going to happen, right? But I strongly believe these things are going to happen. And I've actually adjusted my own life to fit that narrative, right? That we're going to have a cool down housing market crash. But as you guys know, we woke up this morning with reports and news that the first quarter of 2022 was already negative growth for our GDP. Now, as you guys know, a recession is 2 consecutive of negative GDP growth, which essentially means if Q2 of 2022 is another GDP of negative growth, that means starting Q3, we are in an official recession. mind-blowing, right? So far, you guys, I've been pretty accurate in what I have been projecting and what I have been sharing as far as my opinions. But if we go into one more quarter, which is this next quarter, the quarter we're in right now of negative GDP growth, official recession, you cannot hide that. That is essentially the definition. But I'm going to bring this article up right now from CNBC. Take a look. Okay, guys, and starting with the headline, U.S. GDP fell at a 1.4% pace to start the year as pandemic recovery takes a hit. So 1.4% in the negative. Now, the average person was estimating growth of 1%. So this is 2.4% off what a lot of professionals were anticipating. Let's go back to this article, and I'm going to read a couple points that it was trying to make. Okay, point one, gross domestic product in the U.S. declined at a 1.4% pace in the first quarter, below analysts' expectation of a 1% gain. Declines in fixed investment, defense spending, and the record trade imbalance weighed on growth. Consumer expenditures rose 2.7%, but that came amid a 7.8% increase in prices. This is noise, not a signal. So they're trying not to freak out people, essentially, you guys, and they're saying, don't worry, this is a fluke. But I've had a lot of people comment, not a lot, but some people comment, because I've been following the 2 and the 10 treasuries, because that's one of the biggest indicators of a recession. That inverted a few weeks ago. I've had people come on my channel and comment saying, there's no way we're going to have a recession, and the inversion was just a fluke. Well, you guys, it actually is not just a fluke, because we already had number one, the first quarter 2022 negative GDP growth, and that is despite record equity growth in January and in February of this year. So if you take that housing market growth and all the sales out, what is our GDP really, right? What is our true growth? Now, this should be alarming to you guys, right? Now, let's read one more snippet from this article, and then I'm going to close out this video. So here's something that I liked, and I'm not going to go into too much of it, you guys. This is what it's saying. In retrospect, this could be seen as a pivotal report. It reminds us of the reality that growth has been great, but things are changing, and they won't be that great going forward. That is correct, right? So I'm going to end this on some overall conclusions and opinions that I have based on what we just read. So the first thing is interest rates. Now, even though the interest rates went down 0.01 basis points, which is essentially nothing, we are heading into an environment with continued interest rate increases. And as a matter of fact, next month, which is in a couple days, the Federal Reserve is going to meet and probably raise interest rates 50 basis points. So we're going to go into an area of more than likely of skyrocketing interest rates, but keep your eyes on Jerome Powell, keep your eyes on the Federal Reserve and what they're saying, because that's going to be very, very important. And if they go back on the 50 basis points, you guys, and go maybe to 25 basis points or do something out of the normal that they weren't telling us they're going to do, it actually going to be way more dangerous than a recession, right? So that brings me to my next opinion. If the Fed goes back on this aggressive behavior to get things under control, I'm actually worried that we are going to have a situation to where we are in stagflation, which is essentially a recession, but inflation is still through the roof. So I'm actually starting to get really concerned about that, because that would be much worse than a recession and much worse for the housing market. Now, another conclusion I have, you guys, is we may already be in a recession. Next quarter of this year is going to tell us officially if we have been in a recession this entire time. Now, remember, you guys, that's what the record hot, housing market January and February. Think about all these things, right? Now, also, in my opinion, and from what I'm seeing across the nation, we are finally starting to see signs of a slowing down in our housing market. As far as price declines, homes being on the market longer, not as many people going over asking price and things of that nature. Now, like I said, you guys, I'm really want to suggest that you either team up with a realtor or a professional and you watch your own housing market, your local housing market, not everywhere in the nation, but your local housing market, and develop a pattern so you understand what's happening there, right? How much inventory is coming on the market, how fast it closes, because no one is going to care about your home investment more than you do. Don't forget that. So I want you guys to continue to empower yourself and continue to research and even hold me accountable, okay? And you guys, if you can, comment below and let me know if you think that we are going to have negative GDP growth Q2 of 2022 with an official recession announced Q3 of 2022. Now, remember who projected that? I did. And the reason why I think that's important, because I need to be held accountable as far as my projections, as far as the data, and I will continue to tighten up my opinion if necessary, right? But other than that, you guys, I really appreciate you taking this journey with me. I appreciate you watching my video. And if you're out there investing in real estate, I wish you luck and I hope you win.